All right, I meant to start that right away. We're on Zoom, but yeah, we're live on youtube.com/financial wars, youtube.com/Chris Pulver, on Facebook, on LinkedIn, on Twitter, all sorts of places. So sorry to start that earlier, but we're live. All right, think or swim, good. Comments, good. Got it. It prints 1 minute in. So we saw this yesterday live. If you go to the 1 minute chart, as soon as that 1 minute bar closes, this will print, and it will give you the gap adjusted high, gap adjusted low. And again, is it a 100% guarantee that the market will never exceed the box that I have printed on my indicator? No, it's never a guarantee. But we are probably starting with realistically an 85 to 90 plus percent chance that the markets will stay inside of this expected move box, gap adjusted, every single day. Okay. So today, what are we looking at here? The VIX is going up a little bit. We're opening way down 0.8%. Okay. Now, here's the crappy thing. Okay. The crappy thing is that right now, this market's going to open down to about 67.25 or so. All right. Now, 67.25 with a plus or minus 60 means that if I wanted to sell a call, let's say plus or minus 60 here, if I want to sell a call, this is going to say that I could probably sell calls around 6,800 and get decent premium. If I go all the way up here towards 68.40, 68.50, my call premium is going to be pretty crappy. It really will be. So to play on the safer side, I don't mind going up to 68.40, 68.50, going 15, 20 wide bear call spreads, as long as I can get like I've been doing the last couple days, which is if I'm going to go 10 wide, 15 wide, 20 wide on a bear call spread, I need to make a couple $100 on the trade. Now the crappy part is I'm going to risk probably 2 grand to make 150 to $200 today, but the probability of profit is high, very high. And if we're going to start at 0.7% lower and have this gamma direction to the downside, I don't necessarily want to call the low exactly at plus or minus 60 points. I say we look lower. I think we look at like the 2% level from the close. I think we look at the 3% level from the close and just put something out there that's like out of the way, a big broken wing butterfly trap, super low delta, and see if we can just maybe the market just has a dump day to the downside, right? VIX is up to 26. We're going higher in the VIX. It's 9 minutes for the open. So unless the VIX is going to be spiking up early and dropping, um, I think this is going to be a pressure type day where this market still has a slide lower. Look, Trump tried to pump the market up on Monday. It's starting to get faded. Okay. Do I mean that I should be bearish all day? I mean, again, I should probably play it pretty safe. But again, if I'm looking at selling, I'd say 6,800. That seems like good premium. But just in case the market, opens lower and fills the gap, because again, I don't know what this market's going to do every single day. I think coming back to this level, I noted that 67.25 inefficiency from the Monday pop in the afternoon. So if we open here and go up all morning, I don't want to just assume that the market can't go up, right? So, like I said, looking at these levels way up here, if it's possible for me to generate some income, hopefully that's pretty darn safe. We'd have to be, 70, 80 points away from yesterday's close. We'd have to be 100, like 120 points away from the open with plus minus 60. That should be pretty darn safe from a probability standpoint. That makes sense? All right. Would you consider waiting 30, 35 minutes before open? Um, Wait, what? You're saying wait 30 minutes into the open? Probably not. Because the expected move for the day, I mean, again, if I can get premium up here, that's probably pretty safe. If I take on some risk with bear call spreads only, it's probably pretty safe to trade and make some money this morning. And if price obviously opens lower and goes lower, those bear call spreads, whatever they get filled at, are going to continue to show profit. If we have directional downward movement, let's say that I can get $1 up here on a couple of bear call spreads. I mean, if I have $2 of total profit, it might show me $150 of profit if price goes down to hit 66.50 today. So, I mean, directionally, I mean, I want to get in when the expected move is at the peak. So if we're at 60 plus on the expected move and we open up and the market goes, it's a plus minus 45 right now. I mean, I don't know if it's going to come back and go to 60 unless the VIX goes up. Okay. Yeah, but Lance is picking one side of the trade, Curtis. I'm not. You know, I get it. Like Lance uses a VIX-based indicator where if the VIX goes down or up at 10 a.m., he determines that there's a direction for the day. That's fine, but you're taking one side of the trade. and I get paid taking both sides of the trade. So obviously I can exercise some discretion. I don't have to pick both sides every single day. Like today is an example where because we have the largest gamma at 66.50, I would think that if we open lower and flush lower, push lower, that it's easier for me just to sell bear call spreads. That's what I think. But again, that's not a guarantee to just jump in and just short the market right away because I want to stay out of the way. Give the market the chance that I mean every day the market is a clean slate. Okay. If you think, and this is what's insane about zero DT, if you think you can take this with an everyday bias, this year we don't have a bias. This market is literally doing whatever it wants to do on a daily basis. It's selling off one a day and then it's ripping the next day. It's ripping 2 to 3 days in a row and then selling. It's so random right now that this is one of the most reliable things I have is just respect the process and respect the math, respect the volatility, and take good trades. Okay. So no, I don't want to take just one side of the trade unless I feel that I have a high probability. Um, because I know what Lance is doing. It's like his 10 o'clock VIX indicator is going to give you okay. So you want to sell at XSP dollar spread and try to get 20% for that. So you're risking 80 to make 20. Okay, cool. If price and he holds it all day, right? So if price goes back up and threatens your strikes, you'll lose. If price goes down for the morning, up the rest of the morning, I mean, the indicator is accurate, I'm pretty sure, with the VIX, but this VIX is all over the place. I mean, today we're going to find out whether the VIX is going to stay choppy like we had yesterday. Like the VIX was very sideways yesterday, right? But do we go up on the VIX? Well, if we do that, then the S&P is likely going to go down all day. Okay, I still think on the bigger picture, just from my analysis, this may not be timed perfectly, but the fact that we had the Trump bump on Monday that is not having any follow through momentum. We don't really have any earnings catalyst to drive this market higher. We already had Nvidia. We already had a Mag 7. We had Oracle this week. Market's not that excited. We're down 0.75% this morning. So I think the upside is pretty limited. You know, do I think that we can pull back to find this correction here in November 20th and October 10th? Sure. Yes. Has it been an easy path down? Not at all. It's been really, really choppy. It seems to be unusually organized and orderly, but that doesn't guarantee that it can't get ugly all of a sudden. Look, there's a lot of angst. There's a lot of uncertainty in the market. And I'm just trying to stay, out of the way and not try to be a hero here and call that this is exactly what I know the market's going to do because I don't. This market could come right back down to fresh lows today, bounce up tomorrow, and close the week flat. Okay. This market could go up today and then fade. I have no idea. But on a day-to-day basis, all we do is take good trades. Are we on YouTube? Yes, we should be. We should be pushing on YouTube, multiple channels. I am on, let me see here. I am streaming on youtube.com/Chris Pulver. I'm streaming on Financial Wars. I'm streaming on LinkedIn, Facebook, and Twitter as well. Yeah, we're live on all those channels. Yep. Would it make sense? I mean, what are you doing? We do this stuff every single day. So why would it make sense to go one day? It's like today is what matters. Because if we have a gap tomorrow, it doesn't matter what one day looks like. Okay, this is why I've had so many people ask me about a 1 DTE. 1 DTE is so difficult because all it takes is let's say you traded yesterday with a 1 DTE and now the market's down 0.7%. Your trade sucks because it's going to completely affect your option chain the next day. A 0.2, 0.3, 0.4% gap, one way or the other, your 1 DT is going to blow up. That is how Captain Condor lost $50 million last year because he was a 3 p.m. or 3:50 p.m. trader for a 1 DTE, and those gaps lower and higher during the holidays, he martingaled himself into a $50 million loss. So no, I don't want to trade 1 DTE. I want to trade today. Okay? A gap higher lower with that type of sensitivity and option will completely they will put your trade so far off center that you have no chance of getting that trade right. Because yesterday's price action to today's, even though it's your expiration, it's a completely new day. So no, I don't like 1 DT at all. Trade today. Trade today and win today. That is my plan. Okay? So here is what I would say. I'm the only concern I have for today is that we're gonna open up so much lower that I'm not gonna get the premium that I want for like the high bear call spreads. The delta is probably gonna be like 5 or less, and I'm gonna get like garbage credit for this. But um, that's okay. If I can get anything for it, fine. I'll consider taking it. I'll look at it. It's going to be opening to bell in 1 minute. And then also to the downside, we've got some decent gamma around 66.50. We have lows around 66.38. Okay, I'm not calling the bottom, right? I mean, if we're gonna have the VIX go up, if the VIX is gonna go up, I'm not calling the bottom. So, all right, it's opening bell. Let's see what we have. So I'm looking at like 68.40, 68.50 for right now on bear call spreads. Again, you can see that the premium here is offering like little to nothing, which kind of sucks. 6,800 is that's pretty much what it says is going to be like that 10 delta. Let's go here. So we're opening and flushing lower. You can sell around 68. I don't mind getting some bear call spreads around 68, but I'm going to try to go a little bit higher. So 68, 10, and 20. Let me just see. Let me just go to the numbers that I want. So like 40, this is going to be terrible credit, by the way. If I go 20 wide and 20 wide, ugh. All right, I'm going to put this in for a pending order, trying to get me $2 credit. 40 and 45, that's all the way back up to, let's see, 45 and 65, 50 and 70. These are going to be pending orders. I'm going to put this in for $2 in case the market has any bump to it to the upside today. And then for my mechanical trade, 10 delta, let's see what 10 delta looks like here. So I'm looking at a 68.05, 68.10, that's a 10 delta. If I go 10 delta puts, as long as it's below 66.30, which it is, can I get it at 6,600? Jeez, that's so bad. 60 cents credit on the 10 deltas. I mean, I've got to go up here towards that's 75 cents. Yuck. I'm going to do this. I'm going to put in fudge, man. A couple of broken wing butterflies, I guess. 90 to 68 to 15. Does this offer any credit? I'm just going to look for this for, maybe put it in for $1. No official trade yet. Going in for $1 credit. And then 66. Let's go 20 by 66 and 25. Right now, that's a small debit. Let me see if I can get this thing filled for $1 credit. Okay. So I'm gonna kind of work within the context here of these levels. Could the market fall to 66.50? Sure. Could we stall? Let me look at the plus minus. If we go, here's my indicator, right? So you have your box. This is gap adjusted, by the way. So high around 68.36. That's again taking the previous day's close plus the plus or minus 60.52, taking the open and going down 60.52. So we've got lows around 66.64, highs around 68.36. Okay. Right now, because of the opening bell price, my deltas have shifted. I probably need to stick with like the 60. I'm going to go 68.05 and 10. And then see what the 10 delta looks like here. I kind of like the lows. Maybe I go, I'm going to try to sneak in here like 66.10 and 5, 66.10. That's low deltas. See if this will fill for $1. All right. So I pushed a lot of buttons. Here's official trade alerts coming to Daily Profit members. New trade. So I've got a pending 5 wide right now. It's 3:12 expiration. Okay, that trade is pending. I'm going to see if there's any direction to take that trade. That'd be 68.05 by 10. That's a pretty low delta. We'd have to come back and basically get back to the positive negative gamma pivot level at 67.75. So I'm trying to stay above that. Okay, but the day is not done. All right. Catch him on some comments. So Mark, we're good. Yeah. Curtis, thanks for that comment. Okay. So pending orders for right now. Again, we have a lot of open space here with the gamma prints, and that's always pretty difficult just because wide open space means that prices can fluctuate. Yes, the markets can come down and try to test 6650 today. I do have a couple of, let me see what these bearish trades are looking for. So this one here, bearish breakouts. This is up. I'm up $160 or so right now. See if I can grab some profit in this one. That's 195. Let me get a break even or better on the 25 by 20. Let's grab a couple bucks here. So let's go. Oh, that's a nice push. Can I go 250 on this one? 250. Okay, this one's so this trade expires tomorrow. But if I'm in profit, I'm just going to take a little bit of profit here. All right, I got filled on 230 on that trade. My other one's looking a little bit better. This one's up 130 bucks. So max profit would be 305. But I need price to obviously stay below 67.70 for that to be realized by tomorrow. I'm just going to take the profit and just kind of add it to the total here. So I've got let's try 350 credit. That'd be a generous close, but I'm going to try 335 maybe. 330. 325. So 130, how about $170 between the two? It's fine. But that way it's, I'm going to be, we'll probably be in session tomorrow morning, but I'll be traveling tomorrow late morning. So I won't be able to watch these and manage these into the close. We do have a couple double up trades that we'd like to see if price can get down to like 6,600, 6,650 would be great. 6,600 would be fantastic. We have a double up. It's in here somewhere. There's a double up. Oh, wait. Oh, yeah, there it is. Duh, it's at the top. Okay, so it's basically break even. If price can fall, let's say to 66.50 today or lower, this one should be lining up for some decent profit. This is 100 wide. We should have a bit of that butterfly wider than the 65.50. So if this one offers up, a couple $100, I think it's going to take it and just try to carve out a net profit between these two trades for my double ups. So there are two butterfly spreads looking for that breakout. The only issue that I have with this one here is it expires tomorrow. So the good thing is the butterfly trap starts to fill up for tomorrow, but I need price to obviously get much closer to inside my strikes. This one goes into next week, but I mean, for us to get 7,200 by next Friday, probably not going to happen. There's like a 1% chance of that happening. So this one looks more probable. I just want to see how much of a flush can we get for a price to go lower. Okay, we get some real time gamma up. I mean, right now price is doing pretty much nothing this morning, and that's fine. The alternative would be if I look at if we think price and for whatever reasons, like why would price be chill today? I don't know. I mean, if you think it's going to be chill, then you can do. I mean, iron flies don't suck. Expected move is around 45 right now. So if we did 20 to 75, 25 to 75, just do a 50 wide. I mean, as long as price doesn't move more than $36, you're going to get a pretty decent payout about 1.6 to 1, 1.7 to 1. But if price does move more than 44 points or more than 36 points, because that's my credit, I take on risk, beyond 67.75 and below 66.75. So again, that's a pretty expensive day to be like, is price going to stay here? I don't know. I'm not going to take that trade. I'm just trying to do some, very wide but safe bear call spreads. And I'm putting in a pretty mechanical daily profit play. And we're going to see if we can get that to work out. Okay. Let me see what my expected move would offer if I do a 68.40 and a 66. I mean, I guess the issue I have is the bottom here. So the expected move low at 60 points. I mean, maybe the VIX stays choppy on the day. Our major, so we have like triple witching next week on Friday. So we have a Wednesday VIX, and then we have futures options, index options, stock options all on Friday. I think we have a triple witching next week on Friday, but we have VIX on Wednesday, I think. I think VIX is an expiration on Wednesday. Anyway, I don't know if the market's going to be calm going into that or just, kind of hang out in these 20s. But at least for the first 10 minutes, price hasn't done anything. And that's okay. Just that's what price does, I guess. So right now, if I did 68.40, I'm just going to evaluate the price here. So if I did 68.40, that's way up here, obviously. Expect to move 40, 15 wide. I just want to see what this looks like from pricing. That is a 2 delta because of the gap lower. Now I go to the put side, and if we go all the way down to 66.60, again, I'm using a little bit of experience here, use some of my indicators. We do have a gettable gamma level at 66.50, and we also have previous lows at 66.36. I don't necessarily want to put my strikes right here at 66.50. I don't want to put my strikes right here at 66.36. I think if I could, I'd like to put my strikes around 6,600 if possible. So I'll try, that one's an overlap. So I'll go 95 by 80. So I don't mind this trade. This is expect to move top. This is the, kind of safe gap level, 15 wide. Let's see if we can get this one filled for, I'd love $1.50. Like, I don't want to take $1,500 risk to make $50 today. It's like, for me at least, give me $1, give me $1.50. That wouldn't be a terrible trade. So I'll throw it in for $1.50 and a couple pending orders. And I will hang out and see. I mean, I don't have a lot of gamma to the downside. We opened up essentially at the 50% ATR. I mean, it might be one of those days where all the damage is done from in between, previous days close and new days open. It's like maybe the damage is done. But if it just leaks lower, I want to make sure that we are safely out of the way. Okay. Is the market capable of going, beyond 100% ATR? Sure. Well, if we are, we maybe get filled and still stay safe, where I'm trying to call like 6,600 as my intraday low. Right. So I'm going to put some pending orders out there. I'll post in Telegram. Yeah. So let me do this in Telegram. So I put in a couple pending orders. If you are interested for daily profit play, I have a bear call spread that I'm still waiting on. So I'm going to take all of these trades right here and post them. So 1, 2, 3, 4, 5. These are all pending orders, by the way. You don't have to take any of them. But I'm just going to, this is my first trade that I put in this morning. So March 12th is today. These are all 0 DTEs. If any of these get filled, then I'll monitor them. I'll manage them, obviously. But let me take this screenshot here. Okay, and these are all pending orders. All right, so I have several pending orders. I'm just going to label them really quickly. On the image, number 3708, 3708 is a bear call spread combo. So it's 2 bear call spreads. These are the last 4 digits of that trade number. And then 6691 is a broken wing call fly. 7443 is a broken wing put fly. The 9310 is a 5Y DPP pending at $1 because it was only trading for like 50 to 60 cents. And then 1109 is a 15 wide DPP pending $1.50 credit. Okay. So again, you don't have to take any of those if you want to, but I'm looking to see if any of those fill, then I'll probably cancel some and focus on that for my trade. Okay. But right now, price is sliding a little bit lower. Next gamma level would be down here around 6,700. Gamma and 100% ATR around 6,670. Big gamma from Tanuki's reading this morning is 6,650. Okay. Right now, in the near term, let me see if we can grab something really quickly here. This might be a bit of a scalp trade. Let me see if I can position for this. So right now, March 12th, current price. If I were to, could I get a bear call spread? If we go bear call spread, could I sell like 6650? And current price is at 6706. Gosh. I mean, I've got to go so far. I mean, to make this like worthwhile, damn it. Anyway, 50 is the sell price. Just think if I can get some premium for this. 6600. Do I think we get to 50 today? Maybe. Like that trade would be not terrible, but that's way out of the money. I'm just trying to tighten up the risk. This is the only issue with some, or, a lot of these trades that I'm looking at right here. This is like a deep in the money bear call spread. I look at a trade like this. If I can risk less than like $500, I usually take a scalp like this. If I think we have some direction. So I'll show you what I'm trying to do. So see how this is 100 wide, 6,600 sell call and a 6,700 buy call. That is a 100 wide bear call spread. The broker says you can have that trade for 78.30 credit. Now I'm still risking $2,100, but if price goes down, I'm going to see this thing from $78 go down to, maybe if we drop to 60, I mean, shit, if we dropped to 6,650, this thing's up $5,000. Like it's a very lucrative trade, but I've got to be willing to throw, a couple $1,000 at it, which I really don't want to do. So I could tighten this up a little bit. Or I just I mean, it's already starting to move a little bit. Fudge. I think the trade it's just too sensitive right now. Let's see if we get filled on a couple of our still no image. Did I not post it in Telegram? Shoot, sorry, hang on. Yeah, it's right here. Nothing's been filled yet. Don't worry, we're okay. They're all pending orders still. There you go. So all pending orders, nothing filled yet. Okay, so with price falling a little bit, we might see that we might get close on one of our, iron condors, one of our daily profit play trades, maybe. Okay, let me check and see. So if I've got something pinned around like 6,600, I'm curious what that is from a sell off. If we get to 6,600, that's a 2.5% sell off today. I mean, 3% seems to be like the circuit breaker, where just like the market's like, oh crap, what a terrible day that was. But 66 is just below these lows. Let's see what happens. Are we getting close to getting filled yet? 15 wide, not filled yet. 5 wide, not filled yet. If I see, and here's one thing I will say on the broken wing butterflies, if these offer any credit, even if it was like 10, 15 cents, I might take the trade. I know that I'm still taking on risk. So if I took a 10-cent credit, I'm risking 4.90 to make 10 cents. It's not about the 10 cents. It's about the profit trap at the end of the day. That's why I would take the trade. But I'm going to hang out with kind of stubborn credits set on my daily profit play strategies. So for the 5 wide, I want $1. For the 15 wide, I want $1.50. And again, I'm trying to go, pretty far out of the money for these trades and see if they'll get filled. Okay. So my live VIX is at 26.29. We're still up a little bit. I'm not seeing the VIX going down. This isn't a delayed feed. This is live VIX. Okay. So the image and Telegram that I posted, those are pending orders. Those are all pending orders. All right. So I'm just going to hang out. I mean, I like the levels that we're at. The only way that I'm not going to like today's trade is if nothing fills. Because if we have little to no direction, I didn't trade it aggressively enough today to get the credit that I wanted. And sometimes that's okay. I obviously don't like not getting filled, but I don't like settling for mediocre credit. I don't want to have to go too close to price. I don't want to have to go get mediocre credit. I want to get, for a 5 wide spread, I'd like $1. For a 15 wide spread, I'd like, $1.50 to $2.50 or better. But because I'm going further out of the money, I'm accepting like, $1.50 to $2 higher probability is fine. Okay. The 673 is very close. That'd be our participation level, right? And that's fine. If we get filled, let me go to my EGO workspace. So right here, I'm looking at XSP. Okay. Yep. So we did a 673 by 672. It's got to be pretty close. Yep. That participation trade's showing around 46 cents right now. If that gets filled, we got some skin in the game going into next Monday. Yeah, if that gets filled today, that's good. And we've got pretty close defense as well. So that'd be participation. That would be our break even. And then we have our defense stacked up as well with appropriate contract sizes. So, yep, I'll keep an eye on those. While I'm at it, let's see if those get filled. Let me put those in Telegram for everyone. Or I'm sorry, they're in Telegram already. Let me put them in the tracker. That's why I need an assistant, man. I need somebody that can just put trades and trackers for me, put them in Telegram, just help me be a little bit faster. All right, let me throw these in the tracker. So you have them in Telegram, but I'll put them all stacked up in here. So let's go pending orders. This is participation. I'll put them in this order. I'll go participation, break even, 50, 100% ATRs. So participation, this is going to be trade number 55. Above. So 55, 56, 57, 58. The start of the week, I put these in on Monday, so that would be what, the 9th? 3-9. We're going out to the 16th. Pending. One contract. This is the participation level. And then 70 and 69. And then we have the 662. Okay. Last one. 55. All right, tracker's updated. Price sliding a little bit lower. Daily profit play is Telegram written correctly. The call side correct. Let me double check. Which alert you talking about there? Who was asking? Keith. Separate days on TradingView. What do you mean by that? Like separate time frames? Like this? So different time frames. You can do it right here by the name of your workspace. You can choose your layout. You can choose your layout. So I put a four chart layout, and then when I click on the chart, I can change the time. So this top left one is a 5 minute. This is a 1 hour. This is a 1 hour. This is a daily. VIX new highs. Okay. Yep. So we're creeping up the new highs, sliding lower. 66.50. I told you, big gamma level for the morning. That's why I wanted to just do bear call spreads today. The premium is just so crappy right out of the gate. Let me see if we can get anything for like 6,800 this morning. And again, I'd be kind of settling for this, but let me see if it lines up, if it's even worth a trade. So 6,800. I mean, it's not awful. Could I get a couple $100 here? Not really. Even going 10 wide on, I mean, I can't even get $1 on that trade. I don't know. I'm just going to hang out. I mean, basically what the market's enticing me to do is like, okay, if I sell a bear call spread above the positive negative gamma pivot around 67.75, that should be good. But if we come down here and bounce all the way back up, like I don't want to put bear call spreads too close. I don't want to put bull put spreads too close. I think we could go after 66.50. If we don't bounce at 66.50, this thing could go to this low, possibly find a round number around 6,600, which is where I'm putting some of my trades in. So it'd be nice to get filled at a decent strike. So this one is 65.95. This one is 66.10. Those puts, that's a 20 wide put. I mean, those are pretty good spots. I'm going to see if those will, give me something to work with today. All right. Telegram. Let me check Telegram for Keith. So 68.05, 68.10, 66.10, 66.05. Those are correct. That's a 5 wide. That's correct in Telegram. And then the pending orders. So I'll show you the image here. Okay. So if I go here, click on the image, let me zoom in. This bottom trade is, it's 2 bear call spreads. So this is where I started. I want to go to my expected move highs, and I'm wide. I'm going 20 wide. So this is 20 wide, super far out of the money to pull in, a couple of dollars on a very high probability trade. Right now, this is probably like a 99% chance of profit. The issue is I don't have enough premium to get filled on it right now. So this is pending. Okay. This one is around my defense of if my 5 wide gets filled here, then I'm playing some defense with a broken wing butterfly that's all calls. This is my broken wing butterfly all puts. And this is my 15 wide iron condor trying to get filled for $1.50 on a 15 wide. Again, pretty far out of the money. Above my expected move, below my expected move. This is a pretty safe trade, wider spread. See if I can get anything filled. I'm not going to force any other trade today. Like, these are decent levels. I would be confident taking the trades at these levels today. And if it happens, it happens. If it doesn't, I pick good levels. I'm not throwing myself into the market trying to, justify getting into the junk of this noise. But if the VIX is going to like slowly go higher today, the market's probably going to fall towards that 60, 650 zone. The only other trade opportunity I look at today is I'm going to keep those trades pending. The other trade opportunity would be if we see price bouncing. Okay, we just got a trade filled on engineered. Our participation filled. So the 673 participation is now filled. Okay, we got some skin in the game for Monday. Okay. What I was going to say is if the market is going to, bounce off of that gamma or bounce off of these lows, maybe there's the trade for the remainder of the day. That's near term, looking for some type of decent turning point, maybe a bull put spread or even a debit spread later in the day that doesn't cost a lot of money, and see if there's some upside opportunity. That's about it. If the market stays inside of my expected move, I need to see at this point, I need to see price probably fall towards the expected move bottom for me to have a chance to get filled on my trades. I need price to come back up and maybe try to fill this gap to try to get filled on some of my trades. If it stays in between this, I might have a bunch of pending orders that don't get filled today. And that's okay. It's okay. XSP trades down. That is for engineered options. Engineered options. What happened with 313 trades? Nothing. What 313 trades are you talking about? I have a double up trade. That's for tomorrow. The 15 wide shows for $1 credit, not $1.50. 15 wide is $1.50. I'm putting a pending order to $1.50. It might not trade for $1.50 yet. If it's showing $1, and maybe you can take the trade, I guess. But I don't think it is. Let me see. I mean, it's only trading for 55 cents. Was it showing $1 a second ago? In your Telegram post. What are you talking about? This is 5 wide. That's 5 wide for $1. This is 15 wide for $1.50. This is pending. All of my trades today, literally every trade is pending. I don't have a single trade running right now for daily profit play. I'm putting in my levels, setting my orders. Every trade is pending. So I have a 5 wide here for $1. I have a 15 wide here for $1.50. They're not the same strikes. This one's the 15 wide is further out of the money, and obviously 15 wide versus 5 wide. So they're all pending orders. Nothing filled yet. Still updated, right? That's still relevant. Do I have a defensive put trade on the call trade? I do. I mean, those are the broken wing butterflies, yes. So in Telegram, yes, those broken wing structure trades, these are both, I mean, I guess they're defense trades, but I don't have anything filled, so I'm just putting them out there as like, that's kind of calling the top and the bottom on the day. It's a good profit trap trade. But these two trades right here, this one is broken wing calls. Okay, and this one is broken wing puts. Neither one filled. I don't think we're going to get filled for $1 unless price is going to fall aggressively. Maybe we get filled for something. This one is the type of trade where I'm doing a 20 wide. I'm doing 20 wide. If I can get like 25 cents credit, look, I know it's insane to take like a 500, I guess it'd be 475 risk. 475 risk to make 25 cents. But if I can get up to a $2,000 profit trap later in the day, I'll take my chances. If this one offers, 10 to 20 cents credit at all, I'll do the same thing. These are areas where I think the price should be fine, especially on the puts, but to be determined. And they have not filled yet. Nothing is filled. Okay. Did get filled on engineered options. Yes. So engineered options got filled. Let me update this in Telegram for engineered options members. Engineered options. Trade update. The XSP participation level filled. Okay. Updated. Okay. Just just hang out. It could fill. What was the program you did a thing on Sunday? Engineering options, Joanne, if you're talking about that webinar. Sunday webinar was engineering options. The butterfly fill, if it fills or doesn't fill. If the butterfly fills, then yes, I'm going to try to manage, any of those I'll manage towards the end of the day. All the butterfly stuff I try to manage later in the day because that's when all the magic happens. That's when your profit trap fills up. Okay. Yeah. So let's see. Moses asking about Coinbase falling wedge pattern. I'll take a look at that one. I mean, I think Coinbase is going to move kind of by proxy of Bitcoin. I mean, Bitcoin probably has a short-term rally into like the 85 to 90 zone before it flushes back down. So I can see Coinbase getting a bit of love, but I don't know how long-term you're going on Coinbase. It's just somebody asking me on YouTube. Coinbase. I don't see a falling wedge. I don't see a falling wedge. If anything, I see a head and shoulders pattern where this is the neckline. Okay. This is the neckline. I could see this thing going right back up here towards around let's say 270, 280 in this area. And possibly, I mean, that would suck, but here's what I would say. Either one, that's a fantastic short, or two, a very cheap trade to the upside from maybe $40 to $50. So if you're long in the near term, I mean, maybe 240, 250 to 260 price targets. But I wouldn't be too aggressive on that because once we hit, I think 260 to 280, this thing's going to turn and possibly be a pattern to the downside. Okay. Is anybody filled on temporary love? Yeah, I mean, I think that Bitcoin gets a little bit of a bid. I mean, we're at 70,000 right now. To me, if we carve out these lows and we hold the 60K low on Bitcoin, getting above 75,000, we can chew into some of these inefficiencies. Again, big pattern opportunity here on Bitcoin, where to me the structure is this: because of this area on Bitcoin, to me this is a swing that pulls back. There's off if you know this in Elliott wave, it's a flat pattern. So you go high to low, and then the market pulls back for this flat pattern, and then we actually sell off to symmetry. I know that's not going to make anybody excited about Bitcoin, but if we pull back to symmetry in here, that to me is like the long-term opportunity to go back up to all-time highs. From let's say, 30 to 40K Bitcoin price back up to 130, that's a great trade opportunity, but it's going to come with maybe dealing with the pain of maybe going from 100K back down to 40K or 30K, which nobody's going to love. But I still think it offers some good trading opportunities in the, maybe the next 12 to 24 months. Aggie, Nike, I'm already long on Nike. I've got some puts in here. 55 by 50 by 47.50. I think I might have lower strikes on that, but let me double check. Nike. 50, 45, and 40. So I have a ratio spread. This is a 50 by 45 ratio spread, another naked put at 40. I pulled in 226 on that trade. So this was for engineered options. This is a ratio spread plus a naked put. So I bought the 50, sold the 45, which gives me a break-even price around $40 minus the credit. So I'm trying to think what that trade filled for. It doesn't matter because the whole trade is down to 226. So my break-even price on Nike would be, number one, price has to drop to 45 for me to take any assignment. But my assignment price would be 45 minus 5 would be a $40 price. I've got 200 shares at 40. Okay. So $40 at 200 shares, I'm taking $1.13 off of this. So I'd own Nike at 38.87. If I take any assignment, I'd own it at 38.87. Okay. That's way down here. I mean, Nike would have to, I don't know, it'd have to suck pretty bad for this to drop down to 38 and change. We'd have to be down another 30%. I mean, we're below COVID lows. I think this is a pretty good base. If you like Nike, sure. There you go. Right? limited downside if we hold this support. But I'm just trying to play it safe, and so I give myself a little bit more breathing room. My break even is sub 40, but I think it holds. I mean, Nike has a good fair market value. I mean, consumer wise, I mean, people stop buying Nikes when we're in a little bit of a consumer pinch. I mean, it's not like it's this. It's not Lululemon. It's not $150 pants, even though if you go with Jumpman, they are. I mean, fundamentally, it looks pretty decent. Dividend not well covered. Okay, fine. Price to earnings though, not terribly expensive. Well, it's not cheap, but 32 times earnings. Fair market value says 40 based on discounted cash flow. So we might, I don't know, we might find 40. But if I owned it at 40, I'd be happy because I would own it bigger picture. I think we can go from 40 to 50, 40 to 60 and actually make some good money on it. I see the changes in engine options, but not daily profit play. Meaning what, Dinosaur Skip? What changes? Daily profit play doesn't have anything updated. We have no trades running today for daily profit play. I have all pending orders. Engineered options, I updated the tracker because we had our participation trade fill. So we have our break-even price and our ATR levels for defense pending. Okay. All right, give me some more comments here. What else? Wait for bigger discount. Well, I mean, in the near look, you can always trade options, right? I mean, if you're talking the Coinbase trade, look, I mean, short term, if Coinbase gets up to like 252, it's like right now, you could probably do a debit spread. I don't know, maybe 30, 60, 90 days out. And if price comes up here, it's like it'll get you paid. But I wouldn't make it dirt cheap. Or I wouldn't like take on more risk than reward. It's like, I mean, I don't know. Let me see something here. Coinbase, 145. There should be enough premium here. This might actually turn out to be a decent trade, or I can set it to a level that I think is acceptable. So if I went Coinbase, let's say out the next 64 days, do I have any risk to the downside? Well, we have a 145 low. Let's say we did the 150, 45, and 35. I mean, it's not a terrible trade. Similar to what I set up on some of these broken wing butterflies. If I did a broken wing here, let's go 10 wide, 15 wide. I mean, if this was offering like 50 cents to $1, I might just take the trade, but it's only 30 some cents. So this would be up to $1,000 profit trap, but the actual like income side of the trade would only be 35 cents. So I'm not that excited about making 35 cents. It's more, do I think that the lows are safe? I mean, there's about an 84% chance of profit on the trade right now. If I tighten this up a little bit, I would risk a little bit more. I'd have a $500 profit trap, but I could pull $1.60. I just have to take on more risk than reward. So I'd like to tighten that up. $80 income, $500 profit trap, workable. Let me see what this looks like. This one's not bad. This one's not bad. If this will fill, if this fills for over $1, I'm risking 4 to make 1 or 1 and change, and I also have a profit trap of $500. So let's see if this will fill. I like this trade. Let's see if we can get $1.15 on Coinbase. If it's over $1, I'll take the trade. Mid price 13. Let's see how liquid this thing is. 113, 110. All right. If it doesn't fill for $1, I'm not going to take the trade. Come on, man. Bid ask is, I mean, it's pretty wide. $1 might not fill, but we're about to find out. All right. Final offer, $1. Survey says no fill. Let me. I'm going to put the trade down. I'm going to leave it for $1. So define risk. I'm risking 4 to make 1 with a $500 profit trap. Price would have to be all the way back below 140. The low's here at 140, like on the nose. So we'd have to come back to test the low. But if obviously, here's what has to happen. For me to get filled, price either has to fall down for me to get filled at $1, and then I want it to stay, 140 or higher. If it stays at 140 or higher, then I'm in good shape. If it goes, like I said, to the like 240, 260 to 280 zone, then if I get filled for $1, there's no upside risk on that trade. There's a profit trap right there, and then I take my $4 risk below that 140. It'd be about a 135 handle. Okay, how often do they get realized? Well, based on the expected move, I mean, the way it gets realized is near the end of this duration at 64 days, the price is hanging out around this expected move. So, I mean, if you get lucky with the timing aspect of that option trade, the nice thing is in the final probably day, like the day of expiration or the day before expiration, that profit trap will start to show up. So if you're hanging out Coinbase at 150, 145 by the day before expiration or the day of expiration, you got a $500 bonus trap to work with. It's not going to be a full trap until the trade expires, but even if it was hanging out around 150 or 145, I'll probably have an extra $50 to $100 to show for it, which I'll take the profit if that's the case. Schwab XSP. So if you're in Schwab, you can always use the Think or Swim web platform, and you can just type in XSP. If you're in Schwab.com, go to $XSP. So if you're in Thinkorswim with a Schwab account, which I have, here is XSP. There's your symbol. If you're in Schwab.com, you want to type in $XSP on Schwab.com. It just take you a little bit longer to build that ticket out. So it should be $XSP for Schwab.com or XSP on Thinkorswim. XSP on Tasty. Oops, I meant to post that for everybody. Okay. All right. So a little talk on Nike, a little talk on Coinbase. Pending order. I'm going to put it in here. So pending. That was 145, 140, 130. So coin, what's the expiration? May 15th. Buy the 145. Sell the 140. Buy the 130. Dollar credit. Pending. So risk $4. $1 credit. So that's the tail credit. And then a $5 profit trap potential. Okay. So there you go. I'll set a chart alarm here around like the one. If we drop to like 160, that trade might get filled. So I'll keep an eye on it. See if it fills. All right. What are we doing today, man? This market's another like nothing burger. Crikey. I mean, the day is not done. It's just I got nothing going on for daily profit play, only pending orders, which is fine. There's always that saying it's better to not be in a trade that you wish you were, or whatever, you know what I'm saying? Like, or be in a trade you don't want to be in. It's like, it's never fun to be in a trade you don't want to be in. But I'm just a little bummed. Like, I like the levels that we're trading. I'm just trying to figure out, like, are we going anywhere today? I don't know. We gapped lower. If there's pressure to push this thing down, pressure to maybe push this thing lower by the end of the week. What is our weekly low, by the way? If I go to this workspace, so we have Thursday, Wednesday, Tuesday, Monday, literally the low for the week on Monday. So low of the week on Monday, right there, around that 66.36. Is it possible that today we, maybe later in the day slide a little bit lower into the close? Maybe. I'd like to see if that offers some profit on my double up trade that I have the trap between 65 6550, 6500, it's like that might show some profit. Um, I mean, if I missed it by a week, I'm going to be a little bummed, right? If it happens next week, I'm going to be a little disappointed that I didn't time it well enough. So anyway, we'll see. Let me mark this with the low of the week. Horizontal ray. So I'll put this in blue. And that was the 3.9 low. All right. That way, when we zoom in, we have a reference point. Okay. So I recenter the VIX at 67.75. That's my VIX box. We got our expected move gap adjusted. If the market's going to be efficient, then we should be above 66, 64 today. If we're below this is one thing I would say would get me excited about tomorrow. If the market is below this level, okay, if it's below this level, then tomorrow, I think we have a good opportunity to stay in the efficiency zone. I could be a little more aggressive on like maybe the 10, 15 deltas. But like I said, tomorrow is just another day. It's another 0 DT. I want to be in trades this morning. I'm just not settling for like, well, go ahead, just use the expected box. Well, the expected box at 64 with a gamma at 66.50 with lows at 66.35. Remember, some of my trades on daily profit play is calling the bottom. So why would I try to call the bottom at 65 when 50 and 30, like 66.50 and 66.36 are gettable targets for the downside, right? So it's just using that little bit of awareness of, yeah, I get it. But there's a trade-off. If I call the bottom right here and I get paid, like great. But if I'm wrong, the one thing I am liking, and again, I'm not going to be wrong because I don't have this pending order, but the one thing I'm liking is if we're down here below these lows today and we stay there, that this would be an inefficient day and that tomorrow should be efficient. So it should be a little bit easier to trade tomorrow if we go into that type of setup, right? Did you mention your calculated high and low? I did. I mean, it's right here on the box. That's why I have the indicator. Yep. So this is just the expected move high and low, not the VIX box. If I take the VIX box, we have a VIX at 26.47. So if I'm going to an extreme today, by the way, here's another piece of math we calculate in the mornings. So we have a 26. I mean, the VIX is slightly higher. We got a 26.97, 26.97 divided by 16. So 1.68%. 1.68% from the open. So if you want to write down a low today, 1.69%, 1.7, you're looking at a low today around 66.11. Okay. Potential bottom today around 66.11. And again, that is based on a VIX around 20. I put the VIX here around 26.93. Okay. So that'd be, I mean, again, that's a pretty extreme move. It's well outside of my expected box, but that is also like what we use as far as the VIX rule of 16. That is taking the live value of the VIX divided by 16, because that's the square root of all your trading days for the year. And that gives you roughly an intraday calculation of the high and low for the day. If the markets are correlated with VIX and S&P, which they should be, we can typically see that the markets will not allow prices to go beyond what the VIX calculation is giving us. Does it happen? Sure. I've seen this where we calculate a VIX that's like, hey, the market should move like 1.3% for the day, and it goes down 1.5 or 1.6, but it closes back above that 1.3. Okay. So I don't know. It's a pretty safe way to trade. It's just kind of knowing your levels. So we'll see. And do I want to just lean bearish today? It's like, I mean, I kind of do. I don't have a good trade. Not yet. And so if I did the VIX box with a 1 point, what the heck was that percentage? 1.68. So I'd go from the gap. I mean, this is probably not going to happen today, but we go from the close, go up 1.6. 1.68. I mean, that'd be the VIX box high, which you can see my VIX box is calculated based on the close yesterday. So that's pretty much right there at 68.84. So up here to the VIX box high. Okay. Again, because I'm calling tops and bottoms, I like to take, if we have a gap lower, I take that math plus the gap lower. And then for the high, I will take the close plus the expected move. So whether it's expected move or VIX expected move or VIX calculated extreme move, like the VIX is not an expected move. The VIX is the extreme. Does that make sense? Let me make sure, like, give me some Y's and yeses in the chat if that makes sense. The VIX box is the extreme of the day. The VIX is the extreme of the day. The expected move is where prices should be bouncing around between the market makers. Okay. So will we see examples where, the yellow low and the yellow high of this box will never be tested? Yes, because the VIX box is rarely going to see prices ever breach these levels. And if they are tested, these are always kind of good trades just to throw in. And if I could, like, for example, if I get like a 1-to-1 here, meaning if we came down this level and I can do a bull put spread getting 1-to-1 or better, I take that trade. If it hits here, I can get a 1-to-1 or better, I take that trade. Okay, but this, I would say this maybe happens 10% of the time or less. This is very, very infrequent that we hit the VIX box high or low. So the expected move is much more reliable just because this is what the market makers should be paying attention to for the entire day. Okay. Yep. Edward says 67.75, 67.80 bear call spreads offering $1.50. Yeah, that's great. But if we come back to fill the gap today, or we come back to this negative gamma, positive negative gamma pivot, you're asking for a threat. I'm trying to avoid the threat. Now, one thing I could look at is, do I get a broken wing butterfly? I mean, let me look at it. Could we get could I trap it here? Well, let's freaking find out. Let's find out. Let's go SPX. I don't think it's going to offer much, but let's find out. 60. So I've got a gamma, positive, negative gamma around 67.75. Will it give us anything today? 67.75. Okay. I'll go 75 by 80 by 90. So right now I could get I could have a little skin in the game today. I can walk away with about 20 cents profit, maybe about 50 cents profit, have a $500 profit trap. Let me see something here. So that's 10 wide. That's 15 wide. That is, all right. This is going to be an interesting, let me see if this will fill for 15 cents. So I can get a $1,000 profit trap if we come back to 67.85. Break even would be 67.95. Give me 15 cents in this trade. I know it's not exciting to get 15 cents. I'm not excited about 15 cents. But I would have basically a free profit trap. Okay, ladies and gentlemen, we have a trade that's filled. Don't get too excited. It's a 10-cent credit, but it is a $1,000 profit trap if price wants to make an attempt to come back to this level at all today. So late in the day, 3 p.m., 3:15, 3:30 p.m., if we're coming back into 67.75 or 80, this one offers up to a $1,000 profit trap. And it doesn't cost me any money to take that trade. It is a 10-cent credit. So I'll give you that trade. You can have it. Anyone can get it. So this is SPX. I'll curb my enthusiasm. Good. Sometimes I have to talk people off the they get so excited for every trade. Just kidding. So I did a buy 6775 and a sell at 6785 and a buy at 6800. Okay, let me double check that, make sure that's the right strike. It is not. I did 67.75, 67.85, 68.05, 68.05. So I'm taking on a little bit of risk if I'm wrong, but we'd have to have price all the way above 67.95 for me to take on any risk. Hopefully that is not the case for the day. Okay, so like I said, I'm not stoked about making 10 cents at the end of the day. But if this market finds a way to, number one, if we just go down for the day, then we're going to make an awesome 10 cents and, I'll go buy myself a coffee. because after fees, it's going to be like $7. So there's my coffee for the day. But if price wants to come back in and try to fill in this gap from the futures market overnight, which I don't, part of me, it's like the read of the day, this isn't going to happen. We're probably just going to make 10 cents on the day. Okay. But if this bounces, let's say at 66.50 and heads back up in the entire day and the VIX all of a sudden goes way, way down, I would say the market looks like pretty good that it's not going to close above 67.75 or 67.80 today. And I'm going to accept that trade as is. Okay. So, all right, we got some action. But like I said, nobody get excited about 10 cents. I'm certainly not. But what I am excited about is essentially a free $1,000 profit trap as long as price stays below 67.75, because it gets a little nicer if we're above 75. So literally every point above 75, all the way to 85, all the way to 94, we have a profit trap between 60. So at close today, if we're between 67.75 to 67.94, that is a profit trap. So what do I mean by that? That 6776, that's $100. 6777, that's $200. Okay, 6780, that's $500. 6785, that's perfect at $1,000. Okay, then you go on the other side of that profit trap. You've got 6786 would be down to 900. 6787 would be down to 800. 6785 would still be a $500 profit trap, all the way up to 6790. Is that right? 85. Oh, wait. I meant 90. This one, 90. This is still $500. There we go. And even at 6794, it's still a $100 profit trap plus all these. So these are all cash settled profit trap plays plus that little 10-cent credit. So if price is anywhere near these strikes at close today, all these are my cash settled. So when people ask me, like, how do you know what your profit trap is? How does it work? Well, it always works at the end of the day. And if I know that my perfect pin price, let me highlight the 67.85. The perfect pin price is the 67.85. Okay. So that means that the most I can make on the trade is $10.10. So that's my $1,000 profit trap perfectly pinned at 67.85 plus the 10-cent credit. So let's say that give me a price in between here, between 67.75 and 67.94. Give me a price. Pick any price in between those numbers. And I'll tell you how you can figure out exactly what you can make on the trade at the end of the day. Besides your broker platform telling you what it is, here's how you know exactly where it is. So pick a number between that's 19 points. Pick any one of those strikes. 67.91. Perfect. Okay. 67.91. Thank you, Lance. So 67.91. 67.91. All right. How many points away is that from my perfect pin at 67.85? 67.85. We're talking a $6 difference, right? $6 difference. So if the most I can make on the trade is $10.10 minus the $6, that's what? I walk away with $4.10 profit. Because my perfect pin price is the perfect profit. So whatever I am away from that on the upside or downside, because it's one big profit trap. It's this, right? The big profit trap goes both ways. So on either side of that, if I'm $5 to one side or $5 to the other side or $6 to one side, as long as it's inside of 10 points of that perfect strike, that's inside my profit trap. If it closes at 68.10, then I'm toast because my high is 68.05. So if it's at 68.10, I lose what? $490. Okay, so let's use that one, 68.10. Well, I have the 68 I'm sorry, 60, yeah, 67.85 would be my perfect trade. So what's the difference there? We're talking 25 points apart, right? 25 points apart. I have a $10 profit trap. I have a 10-cent credit. I'm outside of my strikes. But the most I can lose is a max at 68.05. So if I go 20 wide, 20 wide on the credit spread, minus the $10 profit trap, minus the 10-cent credit up front, I'm risking $9.90. That's my max risk because I went 20 wide. So yeah, if it's at 68.10, I'm going to lose $9.90 on that trade. But my plan is that doesn't happen. I could be wrong, and I accept that risk. But I think it's improbable that I lose that today. Okay, what do you call this type of trade? A call credit ladder? No, I call this a broke wing butterfly. Because all it is a debit spread combined with a credit spread, and the credit spread is wider. So this structure is when I have a 67.75 by 67.85, that is a 10 wide debit spread. So 10W for 10 wide, and this is a 10 wide debit. Okay. And then I take the 67.85 and I go 20 wide. So this is 10 wide debit, 20 wide credit. And sometimes I will do this trade where it's 10 wide debit and 15 wide credit, so I can tighten up my risk a little bit. But in order for you to pull in a little bit of credit today, I went wider. But because my credit is a wider risk, I have a 20 wide credit spread. This allows me to finance the trade. That's how I can get the 10 cents credit up front. So now my break even price is 67.75 and 67.85 is 10. I still have that 10 on the other side of the trade, so it gets me all the way to 95, and then I take my 10 cents credit. So my break even price is if price today is less than 6.795.10, there is no risk. Okay? So as long as price stays below 67.95.10 today, there's no risk on my trade. If price is above this, I take on risk, and my maximum risk would be 990 if price is greater than 6805. That's my maximum risk. But that's the most I can lose. Okay. So now that this trade is in and I have all these other pending orders, what I'm going to also consider doing is let's take something to play a little defense here. And because this trade is in, I'm probably going to clean up some of these other trades for right now, just to not overlap this garbage. So let me do some of my working orders here, make sure I'm not overlapping too many. So I've got a 68.05. I mean, this one's probably not going to fill today. That 5 wide, folks, is probably not going to fill. If it does fill, I mean, I should leave it because the put side might allow me to get it filled. Same thing on the 15 wide. Yeah, I'll leave these open, but these will only fill because of the put side, not the call side. So I'm still going to leave those iron condors open for the day and see if they will fill. I still like to probably profit on the put side. 68.05 overlaps. I know it does. It overlaps with the 5 wide call spread. You're right. It does. However, shit, I guess I need to cancel that one, huh? 68.05, 60. All right, I'm going to cancel the 5 wide then so it doesn't overlap. There. So that way my broken wing is here. And then I have another broken wing sprinkled in. Then I have my 15 wide. All right. So I'm going to cancel. So if you took the broken wing butterfly with me, then cancel that 5 wide because that did have an overlapping strike. Now I could modify it. I could do a 60, 66.10, 68.10, 60, 66.10, 66.05. So 10 and 05. I mean, these seem to be fairly, it's like I'm just looking at, could I get a little trade going for like 50 cents or a dollar today? I'd like to think I could. I mean, market's sliding lower. These are out of the money. I mean, we have the lows at 66.30. It's like we shouldn't be going too much lower than that. The VIX box extreme. Obviously, the VIX could keep going higher for the day. We could have the VIX at 27, 28, and that changes my lows. But I could have a defined risk trade where it's like if we stay above 66.10, I still make, 50, $60 on the day. Do I love that trade? Not really. Not really. But if I did, let's go 90 by 85, that's in between. And then maybe see if don't want to overlap these. So 20 and 25. No, it's just really bad credit today. So this trade 10 and 20. And again, I'm playing around with the numbers here, just trying to look at a trade that I think is reasonable. If I went 05 to 90, that's 15 wide. This could be 15 wide. I mean, I could go 15 wide and get $1. I'm getting 90 cents right now. Like, let it hang out for $1. It's like I'm literally like grasping it. Well, let's move the strikes and try to find it. It's like I don't really like this trade. $1,400 risk to make $100. It's a high probability $100. But if price decides to fall to 6,600, I'd rather have a butterfly trap sitting there than an iron condor, just because it gives me a $10, $15 buffer, $20 buffer. So I'm just going to hang out for right now. And it might be a day that nothing gets filled. If price falls to 66.50 and finds that gamma, okay, fine. I'm curious what happens. Like we're in enough of a space here, like we're below 6,700. So does it just leak lower and slower all day? That's fine. But I wouldn't mind looking later in the day, like, could I have a butterfly trap around that 6,600 handle? Maybe. Will it fill for $1? I don't know, but maybe it offers me some credit. So let me go working. The put fly is still trading for like 50 cents debit, but that's a 20 wide. I'll keep an eye on this one. Call fly, we've got that one in already. 15 wide. I'm still going to keep this trade in for $1.50 if possible. These are all calls, not even close to getting filled. Those are probably not going to fill today. Disappointing. I'm going to cancel those call spreads. Well, I mean, just keep them. I'm going to keep them. I'm going to keep these pending orders. I'm not going anywhere. I'll be here all day. So if I'll set some chart alarms and see what gets filled. But it looks like it'd just be like a low and slow kick to the downside, which is okay. Question is are we going to bounce at 66.50? Are we going to try to take out the lows at 66.37? And if that opens it up, are we going down to my VIX low, which is my VIX box, around 66.11? That's my calculated move. If the VIX, and here's what we have to watch for. If the VIX goes higher, that low at 66.11 is not safe. It probably could push lower. So this is why when the VIX is going up, it's harder and harder to call the bottom unless you are actively calculating fresh lows on the VIX. Or not for, if you're actually calculating real-time VIX with the lows in your S&P. Does that make sense? So the VIX goes to 29. I have to take 29, divide by 16. That's 1.81%. So I would take my 1.81% from the gap, go down 1.81%, and I would say, all right, well, this market might fall as low as 66.03, 66.04. So if I want to call the bottom, that's how I'd have to do it, is dynamically stay with the VIX. Sometimes that's easier said than done. 682, 681 EO trade. The monthly did, David, yes. The monthly for 331, yes, that did fill. The one I have this week is a 673, 672 got filled for the week. That's the Monday, the 16th expiration. But the 331 did get filled, yes. Okay, HPQ. next week. So I paid 205 for a long strangle, and we have had jack squat happening on this stock. But going into the VIX expiration or going into the triple witchy next week, I mean, it's still a pinch trade. It's like, give me something, man. If we get a run to 20 plus, we make some money. If it drops down to 1750, we make some money. I just want to see if this can go anywhere. I'm really surprised this hasn't gone anywhere, but it is what it is. All right. Mark says took a 45-cent debit on a double bear call spread. How's that work? How do you take a bear call spread and get a debit? Did you do a bear put spread? Where you bought a put, higher strike, sold a put, lower strike, and took some profit? Oh, I gotcha. Nice, man. Good trade. Yeah, I mean, we got a little slide this morning. That was the. I mean, it wasn't surprising direction. I just, didn't jump right in just to assume we're gonna go down. But I don't know. I mean, again, I'm sitting here just talking. I've got a bunch of pending orders. Most likely, if the market, here's what I'm saying for the rest of the day. The market's likely going to try to test 6650, or the market's going to make an attempt to try to get back to this gap fill. If we go absolutely nowhere today, then fine. Fine. That's a very quiet day where what happens? It'd be a very quiet day where the expected move is greater than the actual, which in truth really shouldn't be a surprise to anybody. Like that happens all the time. So let's keep an eye on this stuff today, right? All right. Yeah, I know. They had earnings, they had dividends, they had news, we've had volatility, but indexes still have done next to nothing because they're just so choppy. And I'm surprised HPQ is on nowhere. But I mean, still have another week in the trade. So I'll let it ride. Okay. VIX is going down. All right. Yeah. Well, I mean, we'll see if it goes down. It's like, here's what has to happen. Yesterday, the VIX did this all day. Okay. Today, is the VIX going to do this all day? It's very possible. I mean, if you look at this, and again, you can't assume anything in the VIX. You assume the VIX is going to go down. I don't know. Okay. If you're going to assume anything, smart traders assume that the market is going to be efficient every single day because that's what happens most of the time, which means you always take direction with a grain of salt. The VIX is crushing. This thing's ripping. It's like, okay, it is. But indexes are going to do that less than stocks. Individual stocks have way more volatility and way more, they have way more like inefficiency than an index. An index is way less volatile, way more efficient, and it's for liquidity and stability. So anyway, I just wouldn't get super excited. VIX is just, it's bubbling here between like 24 and 26. Keep an eye on it. NVIDIA short term. Why don't you look at NVIDIA for the last 3 months and tell me what you think? I mean, it's absolutely gone nowhere. So I mean, I think NVIDIA stays bid, but to me, this also, I mean, this could be like, this could be a big deal to the market. If NVIDIA does not stay bid above the 170 handle, let's say this is a head and shoulders pattern, and we break this neckline and go to symmetry, that is a almost guaranteed correction in the market. If NVIDIA falls to like 150 or 140, the S&P is going with it. Maybe not to the same degree. This could fall. How many percent will that be? If we break the lows, we fall. Let's say we go from current price. If NVIDIA fell 20%, oof, I would say the index is probably going to fall 5 or 6% all by itself just because of NVIDIA. So my point is, if NVIDIA stays bid, again, here's a trade I can look at. 171. Do I love this trade? I mean, I don't know. Let me go out far enough, I guess, right? 171. NVIDIA stays bid. This actually might turn out to be a decent trade. Let's go like May or June. 64 days out or 98 out. I mean, I think if we have any type of summer push, June would be the month. All right. This all depends on if I can get a decent premium for it. 155. Check that level first. If I went 155, 150, 140. Son of a biscuit. Like right here. Good trade, broke wing butterfly. Could I get $100 out of this trade if I put in $1 credit? I risk 4 to make 1 with a $500 profit trap. I like the trade. If you want to trade that a little bit tighter, thinking that the 170 level is bid, I could probably get that trade. I mean, the 38% fib at 165, 50% fib is the 150. I don't know. Let me see if I can get a decent fill for this one. I might do like a 1-to-1 here. Let me find out. So I'm gonna take this trade. I'm gonna take this trade for $1. So pending order for $1. Hasn't filled yet. And then the other trade I'll put in, I'll use the 170 handle and see what that looks like in the same duration. So I can do like the buy the 170, sell the 165, buy the 150. 155. So that's 5 wide, 10 wide. This one's okay. Let me see. I'm going to try to get this one filled for $2 and see if we get $2. So I'd be risking 3 to make 2 with a profit trap around that 165 to 160 zone. 160. I mean, that's my break even. If we fell below that, I think we catch a bid. I can get $1.10 for it right now. I want to risk less because I'm going closer to current price. I'm going to put this in for $2. Okay. A couple bonus trades. I'll throw this in Telegram. So this is going to be everybody. Everybody wants a little action. Here's a bonus trade. We find a bonus trade. Okay. NVIDIA discussion this morning. 2 pending orders. Good till canceled. NVIDIA, June 18th. Buy the 170 put. Sell the 165 put. Buy the 155 put. $1 credit. Pending. Buy the 155 put. Shit. Am I overlapping those? Hang on. So if I buy the 155, sell the 150, buy the 140, I'm overlapping those strikes. I mean, it technically still works, but I don't want to overlap those. Crap. So this one's fine. This one, let me shift this lower. I'll go 150. All right, I'm going to go 154, 148. So wait, we'll change the strikes. I'll go 154, 148. That's 6 wide. And then I'll go 8 wide, 10 wide. Let's go 10 wide. So it gives me a $6 profit trap. Let me get this one filled for, let's say we get $1.50. I'd be risking $3.50. Let's see here. 170. This one's pending for $2 credit. Sorry. 2 credit. I'll get this figured out. So 154, 148, 138. This one, I don't mind $1. I'd be risking 3. Yeah, this is a good trade. Risking 3 to make 1 with a $6 profit trap. Okay. So that way the strikes don't overlap. I know it now looks a little bit weird, but all right, 1. So I buy the 154 put, sell the 148 put, and then buy the 138 put. And I want $1. So I have a 10 wide, -6, -1. So yeah, I'm risking 3 to make 1 with a $6 profit trap, pending good till canceled. Quick summary. NVIDIA has been moving nowhere, just like the S&P, for months. Key support at 170, 150 levels. These trades into June can account for any near-term weakness and look for a strong bid around those support levels. Okay. So I'm not assuming that NVIDIA is going to go up from here. It could, and if it does, the S&P goes higher. But if we start seeing weakness in the S&P, in NVIDIA, and things start to leak a little bit lower for the next, 30, 60 days in this like weakness window, then the correction takes place, the market gets a little bit softer, and this is a decent trade where we just need the market to fall, settle, find support, get a bid back up. Okay. So, I mean, for me, going out about 90 days or so, like, I think that's a fair trade versus short term. Like, I have no idea, man. Look at this chart. It's like, how do you determine what to do short term? If you want to do something short term, you do this. You do an iron condor and see what that looks like. If the credit is decent, I mean, let's find out. Could I do a 170 and a 170 and a 200? Let's find out. 170 and a 200 going into next weekend. 170 and a 200. This is going to pay nothing. Okay. I can get 30 cents to risk $217. No, thank you. Is that a safe trade? Yeah, it's an iron condor at key support. It's before the triple witching expiration, but I don't think that's a good trade at all. I mean, I'm not excited about taking 30 cents out of that trade. So I'll stick with mine. I like the broke wing butterflies. That way, if I take the trade, it's like we have a trade where my risk would be, let me find out the strikes. So the 160, so that means my break evens are on 160. So my break even price on that one would be 160. So if we can see NVIDIA by June back above 160 or NVIDIA back above 143, actually 142. So there's no upside risk. If price is above it or price is above it, if we get filled on these trades, this one's worth $2 with a $5 profit trap. This one's worth $1 with a $6 profit trap. So, I'll take my chances. If we get filled on either one of these, it's worth a couple $100. If we get a profit trap filled towards expiration, that could be a bonus. But there's no upside risk, right? So price would have to be down below this for me to lose. Otherwise, if we catch a bid in here, high, low, lower, high, lower, low, if we catch a bid there, great. We get filled on some good trades. We have some income. Just a trade. Okay. All right. Any other questions for right now? As we sit with lots of pending orders and the market staying within my expected move, I do think the market might be leaking a little bit lower. Honestly, at this point, if the market's going to be slow grind all day long, if it gets to 66.50, okay, I might look for a short-term bounce at 66.50 by the end of the day to see if we get a pop back up for maybe 10, 15, 20 points. I might take a cheap debit spread or a cheap credit spread. There's no assignment risk on SPX and maybe grab a couple dollars if it bounces. But if it slides below 66.50 and closes below 66.50, that means that we have an inefficient day today and we should have an efficient day tomorrow. So it should be pretty good to make, hopefully make a few bucks tomorrow. But the day is not done. So I will keep an eye on this. All right. But even if price goes down here and closes back inside the box for the day, that is still efficient. Right? So just because it pokes its head above or below, as long as it closes inside this level, that's market makers being efficient doing their job. The post I put it in Telegram. If you're not in my Telegram, here's my public Telegram. Public Telegram here. Big Nvidia curd. Okay. I mean, what's the average trading volume though? What's that percent of daily trading volume? Because I mean, Nvidia, we're talking a $3 to $4 trillion company. That could be peanuts for average trading volume. I mean, some of the biggest volume is SPY, Nvidia, Tesla. That's where like all your flows are at every single day. Millions and millions and millions of shares, millions of contracts. So I don't know. I mean, I don't think that's enough to move the needle, to be honest. Just me. But maybe somebody knows something I don't. I'm just trying to stay out of the way and play something safe. All right. Anything else for the day? Uh, Otherwise, I'll wrap things up here. Let's see. A couple things. I have a lot of emails to get to today. I'm seeing probably 20, 25 emails to get to today. I just added this in the expected move box. It is $20 if you want it. You can just send me an email, Chris Pulver, pub@gmail.com, and ask for it. I can send you the buy link. If you'd like it, I can just share the buy link right here. It's $20. Okay. So if you buy it, I'm putting it in Zoom, not in YouTube. I'll put it in Zoom. If you buy that for $20, then I will send you a follow-up email. If you have a TradingView account and you want it on TradingView, make sure that you put in your TradingView user ID, which is right here. Okay. This is my user ID. So I had a couple people send me their email. I can't give you the indicator on TradingView with your email. I need your user ID. If you want it on Thinkorswim, then just tell me you want Thinkorswim. It's in the order form. If you type in Thinkorswim, then I will send it to your email with reply, and you'll have the grid code to open up a new workspace. Okay, so Thinkorswim, TradingView. I just need your TradingView ID. But if you click link in the chat, like I said, $20 expect to move, and you're looking at it right here. We do this thing. I built this because like it's gap adjusted. This is a way for me to get an eye on where the markets are likely going to stay for the entire day. Obviously, if they don't, then that's an inefficient day, but that's very rare. And if they also, this is one, it's like the silver lining here. If the market goes inefficient for the day, that means that tomorrow is likely going to be efficient. So this is why I spend so much time, even though it's a zero DT trade, this is why I spend so much time planning and prepping and playing defense. Because if the market is inefficient, I don't want to take full losses. I want to play some defense, try to mitigate some of my risk. And then the next day, I can get in there with like, let's say I can battle myself back to like a break even day. So rather than losing on an inefficient day, because remember, what are we betting on? We're betting on efficiency. So if I can get a break even result and the next day is going to likely be efficient, that makes me even, it sets me up for success where it's like I can recover faster with defense and I can recover faster with once we have an inefficient day, the market's probability of efficiency the next day is very high. That's why I like this stuff. That's why I spend so much time like prepping and planning like zero DT for like a day a day you try to like set the trade up, win the day. There's a lot of prep and a lot of planning, a lot of monitoring that goes into this. But it's for good reason because it is literally a binary event every single day and my goal is to win the day if I can. Not always happens. I certainly take some losses here and there, but win the day and just know what's coming next. So if I happen to mitigate risk for the day and reduce the risk for the day, great. But then the next day I can jump right in and have a nice winner that helps offset that. And then 3, 4, 5 days later, it's like I'm in black with lots of profit. So, it's not every day is going to be a winner, but we do pretty well most of the time. We're sitting at 526 wins so far in the service, 89.2% winners, and average winners like 22% return on risk. That's not bad, right? That's not bad at all. So anyway, all right. If I got some more emails coming in, great. It's going to keep me busy. It's only me. Nobody else is doing this for me. So if you want the expected move box, I just have to get your email and I'll send you the information. It'll be if you type in your TradingView user ID, I'll send you back. I'll give you access instantly inside the back office of TradingView. If you want Thinkorswim, I'll send you the share grid. I also have an 18-minute video that'll walk you through how to put this, on your charts and how to use it every single day for 0 DTE, for 5 DTE, for 7 DTE, for 90 DTE, for whatever you want, any asset you want. So I think it's a great tool. Cool. All right. So that'll be for the remainder of the day. I'll keep those emails hopefully zeroed out in my inbox, but I'll get to all those today. Chuck, You said this morning you didn't respond back. I didn't see anything from you. I still don't see a Chuck in my inbox. I don't see a Charles. I don't see a Chuck. So not sure if it's haven't been sent yet or haven't sent it. Chris Pulver Pub at gmail.com. All right. And we'll see where the rest of the day goes. Yep, for sure. Okay. Thanks, Mark. Thanks, Steve. Thanks, Stephanie. Thanks, Greg. Thanks, Gianna, for keeping this up. I'll get to all these emails. Now I'm just going to keep an eye on things for the day. I'll set a chart alarm here at 66.50. I want to see if price bounces off that at all today. If we hit 66.50, I'll move this chart alarm up here to the lows at 36, 35, see if that gets taken out at all. Would it surprise me if the market's going to slow, find support and then go back up? Not really. Would it surprise me for the day for the expected move if the market would go down here to about that 6664? If we get down to 6650, bounce back above and stay above that expected move, would that surprise me? Not really. So I think there's still maybe a short-term opportunity today if you're looking at buying something around that 50 or 40 handle and see if price can close back with inside the expected move. But one way you can always tell the market makers doing their job is if these levels get threatened for the day, you see price bounce off of them. That's a pretty good sign that this is what, big money is paying attention to defend the stability of the market, which happens a lot. Okay. So Tony, you send me the email, not me. You send me the email, chrispulverpub@gmail.com. Okay. All right. So 0DT indicator, if you're interested, send me an email. If you are interested in any foundational education, if I have any new followers, any new watchers, here is a free 70-minute session. This is a one trade mastery. If I just kind of wet your beak on some option trading, I give this to everybody just for fun, little prerequisite, or just foundational education if you want it for some bonus stuff. So this is one trade mastery. That's a direct play link. So you can just click on that link and play it. So you can copy and paste that, throw it in another browser. If you have Thinkorswim, bud, just again, same thing. I'll send you the Thinkorswim grid share. So all you have to do in Thinkorswim is once you click the link to download it, it'll pop up in Thinkorswim. So have your Thinkorswim desktop platform already running. And then once you click on the grid share and download it, it will pop up as its own workspace. Yep. So it's a grid share. That way it's not taking over your current charts, your current layout. It'll be its own unique pop-up. There you go. Pablo, same thing. Send me an email. I'm not copying these emails down. So your email, send it to me. If it's in my inbox, I'll respond. So a lot of it starts as, I'm interested in the expected move box. Okay, cool. I send you the link. You confirm it. You buy it, $20, and I'll send you the code to download it, or I'll give you instant access on TradingView with your user ID. That's all I need. Okay, this is how easy it is for me. Manage access. Add new users. I type in your username, and you have it. So it is very easy for me to give access, and the grid code on Thinkorswim also very simple. Cool. All right, that One Trade Mastery link is free education. If you are a member of mine in any of my services, practical options, if you are a lifetime member, VIP member, upgraded member to any of my services, this is a $500 course on 13 of my favorite option strategies. If you want to get a sneak peek, there's a $27 quick guide, trading the market, bullish and bearish with spreads. One of my favorite trades to just learn a basic spread trade. All that means is you're buying a call low, selling a call higher. It's a defined risk trade. Or you buy a put high, sell a put low, defined risk trade. Bullish and bearish. You want to trade market up and down? Easy. You want to trade the market up, down, sideways? Watch the full course. Lots and lots of ways to do it, folks. Okay. Everything in option to me is price, time, volatility, and it's a calculated bet. I don't like to trade undefined risk. Other than a naked put that I'm willing to hang on to the shares if I get assigned, most of my trading is defined risk. Okay. But if you purchase it, I'll give you it both. Just give me the so when you send me an email, send me an email for both. Just say expect the move box. I want it for both, and that way when I see that you're confirmed for the payment, then I'll send you the email with both, and I'll give you access. But I do need your TradingView user ID. Yep. Okay. P- I mean, if this was, I mean, if it wasn't for a big marketing team behind me with all these other services, I mean, yeah, I'd go. I mean, I wouldn't mind having a course for under 1,000. But I mean, here's what I think: if I'm going to spend every day with you, the entire trading year, we're going to grind. I've always said that my time is not free. I mean, I'd love to have people that want to just trade with me live, and you're willing to pay me what I think is fair. It's like for $1,000 a year, for $2,000 a year, I'd love to have everyone just sit and trade with me, whatever it takes. Let's get the job done. But a company that's behind me to back that is like, well, if you're in Chris's Project Options Edge or you're a Diamond Club member, we get everything. That ticket price is a little bit higher. They're charging seven, eight, $10,000 to do that. But that also comes with full support and anything you need inside your one-click trading classroom and all the content that I have. It goes inside member classrooms and stuff. It's like I don't have that stuff built out on my own. So anyway, but if I can sprinkle in some, foundational education, some indicator stuff, and keep it cost effective, it's like I just want it to be helpful. Yep. All right, good stuff. All right, so I'm seeing a lot of emails popping in right now. That's great. I'll get to those today. Just give me the morning, give me the afternoon. Like I said, I'm the only person doing it, so I've got to check all the emails, send all the replies, track everything, back office, all the stuff is all me. Yep. Cool. All right, we're at 66.84. Lighting up a little bit to the downside. There's your 66.50 gamma. Wasn't a surprise. This isn't by accident. The market might be falling down towards 66.50 today. So keep an eye on that. One thing I may look at, this is just a trade I'm going to discuss. I will look to see if it offers something up. Um, if the market is going to bounce off of 66.50 today, here's one interesting way to trade it. If we're going to go up, one thing I could do is I could sell a 6,700 put. I could buy the 66.50. That's a 50 wide spread, right? It'd be an in the money bull put spread. I'm going to go here. Let's try to go 100 wide. Now, 100 wide, if I took this trade and it fills for $95 credit, what's my risk? Uh, VIJ is asking in YouTube. It's Chris Pulver Pub at gmail.com. I don't like to put it in the YouTube chat because then bots grab it. So I just write it down, Chris Pulver Pub at gmail.com. A couple people asking me on YouTube. Right. So if this trade was 67.50 sell put and a 66.50 buy put, that's 100 wide. If I got this trade filled for 95 cents, I'm risking 500 to make 9,500. Now, all price has to do is basically bounce it 50. And as long as we're above 66.55, there's no risk on the trade. So if some reason this thing turns at 66.50, goes all the way up to 66.75, that makes me $2,000 on the day, and I'm only risking, 5. But this trade is difficult to fill with time left in the day. This trade is best around like 2 in the afternoon, 2:30, 3 o'clock in the afternoon. That's when this trade is best. So I will be watching this. I don't know if I'm going to get the fill that I want, but I'll pay attention to it. This is what I'm looking for. Okay. Chuck. Yeah. That's why I kept saying, man, Chris Pulver Pub at gmail.com. I've told the team many times, hey, the reason I don't use investpub.com is because it's through Microsoft Outlook. I freaking hate Microsoft Outlook. So I use Gmail. It's just easier. It's on my phone. I have it with me all the time. So Chris Pulver Pub at gmail.com. I made the email, but I'm only giving that email out to everyone that's members or followers of mine, so I know that you're watching me. Yeah, but I hate Outlook. I've not used Outlook since I was a college professor back in the day, and that was because you had to. Your .edu email was in Outlook, and it was just a pain in the butt. So, but yeah, Gmail is way easier. But it's not going through. All right, Chuck, I can only see it. Type your email in, dude. It's host and panelist. Type your email in. I will send you an email, and you and I can have a little thread. Whatever you're looking for, put your email in the chat right now in Zoom, and I'll send you an email. I'll literally pull up the inbox right now to compose it, and I'll send you an email before I go. You have 60 seconds. So nobody can see your email. There it is. Got it. Okay. All right. I'm sending an email, says, how can I help? All good, man. No, I'm just happy. Happy to help you. Uh, Don, I think you are good. I think I've got your email. So, Don in the Zoom chat, is it Rommel? I sent you the email reply last night. Yeah. So I sent you the reply, and then if you did purchase it, then I'll reply to that. But that's the only thread I have. Is I have your TradingView ID. I sent you the reply to have the buy now link. If you bought it, subscribe to it, then I will follow up with that. All right, look, stop putting your emails in the chat. Okay. If you want to email me, chrispulverpub@gmail.com, send me an email. That's fine. Okay. All right. So again, I'm getting like 30, 35, 40 emails. That's fine. I'll get to those today. Okay. A lot of them just asking for the box, the expected move box. It's great. I'll give it to you. I'll send you the link. You subscribe to it, pops up in the office, and I'll send you the follow up. Check. I mean, I guess check your spam. You sent me the email. I replied to it. I've got it in there. I've got your email. So I sent you a reply March 10th, 4:43 p.m. And the email from me from chrispulverpub@gmail.com is expect the move box indicator, buy now link. Once payment is confirmed, I'll review, email, TradingView ID, Thinkorswim script. Yep. Okay. All right. We're wrapping up there. Let me just help the questions. I'm watching to see. So more importantly is if price finds, and here's Gamma today. If price finds, keep these levels in mind. Two levels: 6650 to 6535. 6650 to 6535. If there is a bounce coming today off of either one of those levels, that would not surprise me. Take a look at my expected move box. That expected low is around 6664. So between a bounce of maybe 64 or a bounce around the gamma at 6650, I could see the market going back up and having like a nothing day, but it's got to get a bounce in the near term. So if I could take a low risk trade off those lows, I would consider doing that. This slow grind to the downside right now is not enough to get me filled on my pending orders today. So even my puts, not filled. Not filled, not filled, not filled. That's sorry, that one's a waterfall income. So those are all calls. That's a call butterfly. This is my put fly that's 20 wide. Does a 10 wide offer anything? Let me look. So it starts at 66.20. If I did a 66.10, 10 by 66 by 85. I mean, it's basically a free profit trap. But it's like if price goes below 6,600, I could be in a little bit of trouble. I'm risking $500. I'll just sit and let these marinate for a second. Okay. Anyway, like I said, the plan for me for the rest of the day is this: watch the expected move box and see if price will bounce off of it. Watch the 6650 gamma. If we bounce off of that, watch the low at 6636. If we bounce off of that, I'd be looking for some type of short-term trade. Do not take that trade with high risk. That would be a lower risk type trade. Okay. All right. Rommel, that is really weird because I literally show it as replied and delivered. Anyway, I'll just try to send you a fresh one. I've got your email, so I'll try to send you a fresh one. I'm write it down. Okay. All right, buddy, we good? let's wrap it up here. Keep an eye on that 66.64. Expect the move box low. 66.50 gamma. Possibly bounce off that gamma level. Previous lows from Monday, 66.35. Okay. Again, not forcing a trade, but if we get a bounce here, a low risk, high reward setup would be advantageous. I think that's worth a stab at the day if we're going to get something between like 66.50, 66.40. I think to me that's worth taking a stab at it for today. Low risk. Okay. Uh, Alan, I sent you an email back, right? Alan just sent me an email. I've got his username. All right, I'll add him in. Cool. All right, good stuff. Come back and see me later. I'll probably be live this afternoon to maybe wrap up into the close. If things get more interesting with some trades, if I find something I like end of the day, maybe I'll pop on in the final hour and maybe grab 30, 45 to 60 minutes live with everybody to see how the day is concluding. If any of my daily profit lay trades that are pending get filled, I'll pop those up in Telegram and update those. If you want the bonus trades today, I did 2 bonus trades in NVIDIA. Okay. Again, they're not filled yet, but I like the structure on those. It's good support. It's not super time sensitive. This one, they're both June 18th, by the way. Sorry. This one is. That way they don't overlap. Same strikes. Or I'm sorry, same expirations. Good question. So somebody asking why don't I have somebody like Dave or like Christian help me? Well, I think if we got this room up to like 400 or 500 people, then I would have a Dave or I'd have a Christian or I'd have somebody follow me. So you spread the word and get more people in this room with me. I mean, obviously, with this is a free session for everybody. If you think this is valuable and worthwhile, then tell your trading friends and tell your trading communities like this is a great place to be. Come out and hang out, get a chat going. By the way, chat's open for everybody. If you want to keep the Zoom open, yeah. So we spread the word. We get this thing up to 400 or 500 people a day. Awesome. Then yeah, I'll have somebody I can kick some. I mean, Blake usually helps that. He's on baby leave. Deanna can speak up anytime she wants. But yeah, we can do something like that. Deanna's always here in the background, always helping everybody. Mark's asking about Diamond Club access. Call the team. Call the team if you want prices, inquiries, anything like that. Call the team 904-706-3537. That'd be a direct call and just ask them, all access, Diamond Club, any of the services, stuff like that. They're always here to help. Cool, but I appreciate you spreading the word. I didn't get the indicator in video. What? Man, hang on a second. That is so weird. Alan, I sent you an email at 2:16 p.m. Eastern time yesterday with the whole summary. Thinkorswim, if you got your TradingView ID, which I see in my tracker. Yes, I think I gave you access, dude. Let me double check. I'm pretty sure I gave you access because I followed up with that email and you're on my spreadsheet as a TradingView. So if you check your invite only, you should see that it's there. So if you go in indicators, invite only, you should see expected move box in there in your TradingView. But I got you at the top of the inbox. I'll send you the reply. That is weird though. Especially when it's like you email me, I reply to the email. So maybe what I'll do is I'll just reply to your sent email. Whatever. It's fucking email. Who cares? I'll figure it out. Right. But I think what's happening is if I'm just sending it from like a compose versus replying to yours, like maybe your inbox is being a little bit more filtering, I guess. Okay. All right. I'm leaving. All right. I'll see you this afternoon. Let me get to some emails. Let me tend to some emails and we'll talk soon. All right. Thanks, everybody. See ya. Thanks, Eric. Appreciate that. Thanks, Diana. Talk soon. Bye. Hey, Steve, how are you, man? I'm good. Hey, I wanted to call. So when I did the invoices, I did do the invoices, and I also have a Stripe account that I use for my online education and YouTube stuff. And because it defaulted to that on my phone when I sent out like Doug and Avery Crawford, I need to send Tony's because I know he was still waiting on something. But anyway, all the invoices I sent out were through my YouTube crap, and so they've been paid. And I'm just going to do one invoice for the golf lodge and just pay. Do you want me to like itemize it so it's like here's my, here's Doug's, and I'm just going to pay it like it's coming from me now because it came to my Stripe. Does that make sense? So that was a mistake on my part, but I just defaulted that oddly on my phone when I was sending out the invoices. Okay. Yeah, I don't care either way. Okay. Okay, I'll get the totals. Yeah, I'll get the total sent over. So I know Doug is paid, Avery Crawford is paid. I think Sean Marsals is paid, and Tony Hall, I'm going to get him invoiced, and his stuff he can pick up on Monday with me. And then Edwin Clements, his clubs haven't come in yet. He has a set of Wilson clubs coming in. So anyway, I'll get those paid today. That's awesome, Chris. Thank you. Okay. Yeah, the message looked good for the TaylorMade demo thing. The message looked good. Like, get that out to everyone. I'd love to have a busy day, because if you're gone, Jeff's gone. If it's just going to be me with the reps, like I just want to have 10, 12, 15 appointments and make the guys busy. So we're doing some good fittings and moving some inventory. Like that'd be great. Yeah, and I want to get some clubs too. So I guess you're going to have to do that for me. I mean, that's fine. It's just, I mean, you're gone though that whole weekend. Yeah, we have Rachel, our youngest, just had a baby, so okay, we're going down there. Okay, and so we just can't. Well, whatever. What I mean, have you hit any? I mean, you took the driver to Cabo. So how was it? I mean, if you like it, then I can just get it for you. We'll get a PUD or whatever. Yeah, I love it, but I want to get some irons too. I see. Okay. All right. Well, I mean, I'm just trying to think. Have you hit any of the stuff? Like the iron heads are mostly the same. There's only like one difference in the iron heads. Depends on what style you're doing.
When you come up one of those times, I'll just meet with you.
Okay. Okay.
And you can see me hit a few and see what you think.
Okay. Sounds good. All right. Well, yeah, we'll get it. I mean, a driver easy if you know what you want. That's cool. But I'll make sure that you get it to PUD so they'll get you hooked up, and then hopefully we're moving. I mean, the irons are great this year. The drivers, the shafts are really nice. It's just it's crazy how expensive it is for us. Like even our cost is like 575 or 580 for a driver. It's so high. I know that Alex hooked us up on this last invoice because I think he gave us like 30 off on a couple of the orders because we kind of blasted him with like a decent chunk. So he gave us like 30% off, which helps because that keeps our margins better. But if they don't give us that tournament pricing, I mean, it's like 580 for the driver after tax and shipping and stripe. It's like our cost is like 620, 625 on a 649 driver.
Well, we have a 30% margin on TaylorMade.
That's only if he gives us the price though. Like if Alex doesn't give us tournament pricing, we're not getting that margin.
No, we have a contract with them. Like we have a wholesale account with them with 30% off.
Okay. I mean, that's good because when he sent, I think he sent me an email one time. He said the cost is this. I'm like, that seems so high. Like I swear I saw the cost was like 576 on a 649.99 MSRP driver.
Yeah, because on their invoices that they send to us, it shows the retail and the wholesale costs.
Okay. Okay. That's good.
It shows a discount. I'll look again, but it's been running about 30%.
Okay. Well, that's perfect. Wilson too. I mean, Steve Williams hooked us up. He gives us pretty good pricing on that's 2 sets I sold with Wilson. So
Yeah, the Wilson, everybody got 40.
that's, I mean, great. Yeah. Okay. Sounds good, man.
All right, my friend. Hey, thank you. Appreciate
All
all
right.
you got.
Thanks, Steve. Talk soon.
Okay, take care.
Bye bye.
Bye-bye.